that you had a very good week. And this is being live streamed on an Awesome 10X. And for those who are new here, please don't forget to like, subscribe the channel, to share to your friends. All right, so March 18, 2022. What a great week to cap this off. Now I'll tell you what, no matter what the stocks do tonight, it wouldn't matter because for the entire week, the last end on Friday is just the cherry on top of a very bullish week. So the bulls have already won, and I'm going to share to you how much the bulls have already won this week and likely spelling out a potential bottom. So as the title states, great growth stock sale is over, to the moon again. Obviously, this is a very controversial presentation simply because most people know that the risks are still there. We still have inflation, we still have higher interest rates, and we still have a ton of sanctions that will not really end, which will incur inflation for the world. And as you can see, commodities are still very high. Wheat prices are high, sugar, commodities, oil is very high, and it just broke out last night above $100 again. Why then would the market cheer despite all of this and without a very clear sign that the war in Russia and Ukraine is over? So let's begin. This is what's happening this week as we speak. So for the entire global indices, we're not talking about just the US indices, but the US, which managed to stay strong at about 4 to 5% index each, would have to fall 5% down tonight just to negate the bullishness, which I believe is not in the cards. You've got Europe, 5, 6, 7%. You've got Asia, specifically Hong Kong, rallying 7% for the week, and Japan hitting 7% up for the week. These rallies globally, also for the week, the dollar is finally down. For those who are looking at dollar peso hitting 55 or 54, nope. It seems as if we peaked for the dollar, at least in the short term. If the dollar has peaked, that means that all the reverse is going to happen. It's possible that oil might go up, but it's possible too that $125 was the peak. It's possible nickel can go higher, but not to the point of $100,000 per ton. It will just remain $40,000, $50,000, still high. Actually, that is still very elevated towards what? 2-year low of about 16,000 per ton. But what we're seeing here is that the market has accepted inflation. The market has accepted 7 rate hikes. And that's why the market cheered. The market cheered on the back of that interest rate hike last FOMC, March 16. And let me show to you just how fierce the rally has become in just 3 days. March 15, 16, 17. Obviously, today, March 18, is day 4. So if you are not yet long, well, these are the FOMO moves that you are going to be missing out further if you're not going to go in and buy some stocks, even if it dips 1%. So let's take a look. Your fintech stocks, most of them, just let's look at the table first. So for the fintech stocks, your insurance loved name is Lemonade. I didn't put Rocket, I forgot. But we're going to get Lemonade and Affirm. Lemonade and Affirm have already risen 30% each for just 3 days. Square has rallied 24%. We're just talking about the rebound in 3 days. I didn't take you to the 52-week low. Yes, I know Square had an $85 a few weeks ago, but we're going to base all these rebounds when the entire market, in our view, bottomed. And when we say in the entire market, we're talking even the SPACs. We're talking even the small caps. We're talking about even the rotten names, the most unprofitable names in the biotech sector. They also participated on the rally. And if there's a stock that didn't go up, it is either an inverse fund, which is obviously the reverse of all the longs. And the only stocks that didn't rise too much were actually a little bit on the consumer staples and the defensive industries, which should have happened because if we're going to get risk on, these defense sectors shouldn't rally too much. And I'll explain that to you later on. You could see all of the battered names dropping more than 50%, some 70, 80% have rallied a ton. In fact, when Peloton was rising from $20 to $23, I myself was wondering, what exactly is happening on Peloton? Is it becoming a buyout candidate? Why was it getting bought on March 15? We were seeing stocks that were the worst of the club go up. So when you see some of the Chinese stocks on March 15 rise, the actual announcement of Vice Premier in the headlines was March 16. Surely some people probably knew something on March 15. That's why there was some buying going on. You could see Douyu, KC, was rallying prior to the announcement of Chinese stimulus. Either way, you can clearly see the following things. Even if you did not buy the lows of the year or the day of March 15, at the closing price, you still are managing 30% on Lemonade Affirm. If you bought the other day, which is March 16, your 21 is still 25. Your 33 is still 36. Your 116 on Square, if you habol or chase, is still 128, which is still a 10% pop. Your Robinhood, which everyone hates because of the lack of earnings, still managed to go up from 12 to 13. Your Upstart, 106 to 116. Your ARK Fintech Innovation Fund, which is just an ETF, which owns Square, Hood, Coinbase, rally from 27 to 28. Your Coinbase, 172 to 177. We've seen the lows at about $150. The closest 155 on March 15. PayPal, 107 to 112. The lows was lounging at 100 for a while now. We're seeing SoFi rally 8 to 9 and possibly back to 10, 11, 12. How about the gaming metaverse stocks? Irrespective of whether they beat their earnings or they missed their earnings, the market just bought anything and quite everything. Everyone's quite a genius this week. As long as you were a buyer. You were only a loser if you weren't buying. Roblox went up from 37 to 41 to 46. That is a $10 move. Yes, I recognize there are resistances on Roblox, specifically at $55 and $60. However, that is still a very sharp bottom. So for those who are looking to buy, you should be buying near March 15 or at the very least March 16 pricing for safe entries. Now, whatever happens tonight, March 18, yeah, we could get a take profit, a victory lap for the bulls. Some would take profits, but that does not negate the fact that these are still the capitulation lows or whatever you want to call them. Unity, bottom 77. While there could be resistances tonight at $100, that is still a massive move. 25%, 77 to 92, and still potentially ticking higher. Now, even the wearables on the metaverse have been rising. Thought the metaverse was just a thing of the past, that it's going to be 7 years on out, and people wouldn't buy anything on it. Well, so far, after falling a precipitous 80% fall, you've got Copen from 12 hitting $2. So far, it's been the leader in the sector on the wearables. Copen rallies 17%. Vuzi from 5 rallying to about 6 to 7, 6.63. Eman started rallying from $1 to $1.20. MVES from $3.85 to $4.27. Himax from $10.50 to $11.48. Now, how about software stocks? In software stocks, PagerDuty had a good earnings. From 24, it rallied to 26 and 32, making it a 30% gain. But as you can see, almost every stock in the software space went up. Cloudflare, 85, 95, 106. Snowflake, after even bad earnings, after a miss, 170, 197, 208, still well loved by the market. Sentinel-1, after a boisterous run during its IPO and a 50% halving from it, at $30, it rallied to 35 and 38. Fastly, the stock which everyone shunned and abandoned, From $13.70, it's now to $16.40. Twilio is something I like and I bought during this dip. Twilio is a company that had been handling all the notifications on your SMS, if ever you've seen it. Example, the OTP passwords, because everything you program, most software developers use Twilio for programming those chats that you receive, whether it's a Grab or an Uber taxi ride, which tells you that your driver has arrived. So Twilio, 128 to 144, 150. What a far cry from the 52-week high of 412. I'd say any dips from about 130 to 150 is a buyer's paradise. Palantir, of course, everyone loves, at least the Awesome10X community, and I'd say all the retail and the Reddit community also loves, from $10 to $11 to $12, a massive favorite of the world, up 14% for the week. Any dips near 12, 11, likely being bought by a lot of whales. Team Atlassian, $245 to $280. Datadog, also a well-loved name. I'd have to say among this list, my favorites are Twilio, Palantir, Datadog, although I couldn't say no to Net, Cloudflare, and Snowflake as well. Datadog from 120 to 137. DocuSign, I'm still using DocuSign. I don't know if you don't. I don't believe that after the pandemic, we won't be using DocuSign. 76, 83, 87. Zoom Video, as you can see, I'm using Zoom Video like everyone else in the world teaching online. So that's 98, 106, 111. Still, I bought it and any dips near 100, I think, is a viable zone. Coupa Software, 72, 79, 81. Zuora, 13, 14, 15. ServiceNow, 514, 547, 566. So we're seeing lower returns on the large caps. Zscaler, 196, 272, 14. Zscaler missed its earnings. CrowdStrike, great numbers, but never fell. If you'll notice from the 52-week high standpoint, CrowdStrike is still within that 300 mark. So the market doesn't see too much of a value on CrowdStrike, unlike what they're seeing in the other names. Okta, 148, 155, 161. Salesforce, 196, 205, 210. Fortinet, 283, 297, 303. I forgot to write Palo Alto Networks here, but Palo Alto Networks is about 500 to 550, which is also less than 10%. Workday, 221 to 235. So what we're seeing here is that amongst the large caps on softwares, the market is willing to buy and make it rebound 20 to 30% if the earnings is great and if it's very far from its 52-week highs. So what would pass on that note? Well, I'd see that the biggest passer is Twilio and Palantir. Twilio being 412 to 150, Palantir 30 to 12. If I have money to buy in this list, I'd still go for Twilio, Palantir, perhaps Zoom Video because I'm a contrarian. Zoom Video falling from 52-week highs of 400. That said, I don't really expect Zoom Video to hit 400. But indeed, I am a contrarian buying it because it's a 6 times price to sales type of company with 85% software margins. So most of these companies are best suited to be checked upon individual fundamentals. But just from this table of looking at the rebounds and the 52-week highs, you can clearly see that some people are seeing value on some names being traded here. And I think a lot of people are looking at the sweet spots of the $20 billion mark. Twilio, Palantir, safe entries there. Still, Datadog is about 40 billion. Datadog never really fell much. So you could see from 200, it's still 137, which might be very strong, but also not that cheap versus the rest. Similar to your Snowflake and Cloudflare. Not really as cheap, but everybody loves them anyway. Cloudflare, Snowflake, Datadog, these are well-loved companies in the software space. Now, of course, Chinese stocks, very monstrous movements. You'll see that most of the market caps in Chinese stocks don't even trade anywhere. Most of them are just $1 billion companies. VNet, which is a partner of Microsoft for their cloud security and data centers in China, rallied 70%. From 35, it fell 90% down to 3.8. Actually, it fell as low as 350 and went 100% up to 7, had a correction at 6.3, and now it's 66% up. But still, I'd argue these $3 arenas for your VNet and Kingsoft have been bought. Actually, Kingsoft fell as low as $2.50. So what you're only seeing here is simply the closing price, not the actual lows of those Chinese names. So still, even at a 100% and more move, VNet and KC are getting most of the bargain hunting club amongst the Chinese. And why not? VNet and KC are actually software cloud plays in China. That means that in China, if you're bullish on cloud, i.e. you're bullish on Microsoft, then likely you're bullish on VNet and Kingsoft Cloud. So these are both cloud names in China. Cloud software names have been bought massively. Of course, this is kind of madaya because this is a double. This is an 200% long on Chinese internet bulls. So the Chinese internet C-Web rallied 50%. So 4 rallied to as high as 7, had some profit taking at 630. But I would assume any dips near 4 would be bought for C-Web. Now, Dada is an interesting case because as we all know, JD's partner is Dada to handle all those delivery last mile towards any third-tier city or second-tier city. And so, just like Didi and Dada, I'd say that Didi and Dada are both what? Just like Meituan. Didi and Dada have been hit mostly by labor concerns, as you know. And for Didi, it was more on the regulatory formats about the privacy as well of who are riding those taxis, basically, right? So it's funny that they sound the same, Didi, Dada, right? But just for, remembering things, Dada trades at 2 billion, and might I say Walmart is a huge partner of Dada. Didi, I don't remember who is the large partner, although obviously I know SoftBank owns a lot of Didi, and 12 billion market cap. If you will ask me, I don't own a single share of Didi. However, I will not be afraid on a Pinduoduo and a Dada, or a Doyu, or a JD, or an Ihang. Basically, I am still afraid of Didi, but all the rest, I'm okay. So, yeah, or I can just buy a simple internet bullish fund, which is Yin. So Yin bottomed at $3, rallied to as high as $5.12, made a pullback to about $4.55. Actually, it pulled back to about $4, $4.20, depending on what intraday levels that we're speaking of. But still, we're seeing that $3 is a low for Yin. So 50% up for Yin. Can it go 100%? We think yes, because it's a 3x Chinese bullish move. Pinduoduo has rallied very strongly. Of course, everyone still loves agriculture e-commerce platform of Pinduoduo. So a lot of Chinese are still considering and continuing to buy their produce from Pinduoduo. So they're buying it and shopping from it. So Pinduoduo rallies after a precipitous drop from 170 to 27. So basically it dropped 85%. If you're looking for bargains that are real bargains, if you don't mind the Chinese Communist Party risk, as people always say about China being uninvestable, well, indeed, you would see the biggest value opportunities in China. The growth and value are all here. So Pinduoduo trading at 49 billion market cap, rallies 44%. We view any drops as a potential buy. So last price was 39. Actually, last night it was falling about 37, 36. I've been 37, 38. I've been picking it up. Even if it falls 35, would have bought Pinduoduo. I'm not as genius to get the lows, which was about 27. But I'm willing to buy the dips in Chinese case after that humongous rally. For DD, I'm not a bull, even if it's rallied 40%. So $1.80 rises $3 there. Doyu is an interesting case. Doyu is actually trading below cash per share. So Doyu and Huya and I'd say API, these live streaming companies have been criticized by Chinese government because they're using a lot of influencers. They're using a lot of time from people to do a lot of live streaming games. Apparently, China doesn't seem to agree that live streaming entities and influencers are spending good use of their time. I don't know. Either way, um, they're trading actually at cash valuations. And if you're using, as we know, Clubhouse, Agora has been the partner of Clubhouse, well known about that, and a lot of live streaming services. Many companies are using Agora. So I'd say that there's a lot of value there. 67 goes down to 90% down to about $7. Rallies to 10. Is it a valid buy? I think yes. I think the market choosing to buy Agora and Douyu had a lot to do with the fact that there are some companies continuing to use them, especially actually most of the schools on China are using Agora for their live streaming discussions. So when you are participating with massive multiplayers, not just for gamers, but in this case, massive multi-student classrooms, Agora has been a very great partner for those real-time connection, real-time videos, video chat lives. So basically live streaming classes or dances or anything that you want to live stream basically. So it's very suitable for educational platform. That's why when there was an educational crackdown that hit Agora, unfortunately, all that nonsense made Agora go down to this valuation, which I think is a great value. A great value brought about by those circumstances. So Agora is now trading at $7, rally to 10. Any dips at 9, 10, I think it's a good buy. So yeah, $1 billion for Agora. Tony Zhao, great business and something to keep in mind. JD, of course, is one of the large caps that fell down from 92 to as low as 45. To be honest, among Chinese names, JD is one of the most resilient, the strongest, because it's profitable. That's about it. It's the big three, right? The big fangs of China. So JD is 763 billion, rallied massively from 45 to 64, and now getting a correction at 62. I do think that while JD is strong, I don't think that you can get much of a big return. Maybe you'll get a good return, but you missed out on that drop at 45. So it's okay. We missed out on some people missed out on the JD, some people did not. Okay, EHang has rallied strongly from $8.60 to $11.45. This is trading at $600 million. For some people, eVTOL is an infant industry. A $600 million market cap is cheap depending on how much of a growth investor you are. The nice thing about EHang is that it did lock in a lot of revenues and partners. So actually earnings-wise, EHang has been getting a lot of buyers from the Chinese government, from other countries as well. So it's an interesting company being bought by the market here. So I guess all the buyers of Joby Aviation will also agree on this buying move of EHang, specifically because Joby trades more than $10 billion. Some of them are $5 billion market cap. This is like 10% of those valuations. So don't be misled. Just because EHang is trading at 10, 11 doesn't mean that it is more expensive than, say, Joby at $3 or $4 or $5, just so you know. Futu is a brokerage firm. It has gone down 90% from $181 to $26. Market cap right now is 5 billion. Amongst these Chinese companies, I've always loved Futu and Pintuotuo to the extent that they really are growth monsters. So Futu traded 33% up. I'll say that people are still willing to buy this on dips. So actually on the dip from 36 to 33, I started nibbling. And I think if it dips near this support of 27, I'll be a buyer. Actually, in general, I'm willing to buy 10% higher from that March 15 lows. But if I can't get 10% lower, even 15 to 20% higher is fine. That's why I got in at 33 for Futu last night. Baba, of course, a lot of people are willing to buy even at $90. So Baba, there's still a lot of buyers at 90 and 95. Alibaba is a 2 trillion market cap. Sorry, but that's yuan. You have to divide that by 7. So that's about just $300 billion market cap. Okay, I forgot to mention these are trading at yuan levels. So some of them are actually trading even less. Yeah, so just actually Alibaba's trading at $300 billion market cap. JD is trading just at $100 billion market cap, not $700 billion. It's not USD based. So most of these Chinese companies are yuan based, renminbi, which you have to divide by 7. All right, so that means that Huya is still very low. We know that Douyu and Huya are actually in doing a lot of insider buyback programs because of how cheap they are. In fact, for Douyu, I think the owners were buying as high as $2. So that could have been the reason why it pumped up easily from 140 to $2 as well. So $2 was where the buyers were buying, and so on. We can clearly see the accumulation still happening on Douyu. For KWeb, that is the index. It rallied 30% just because of course, your JD, your Pinduoduo, your Alibaba, and all those Meituans. So basically, it's the Chinese internet as a conglomerate. The Chinese internet ETF, all the large caps. How about the cars? The cars were also up, 27% for Li Auto, 26% for NIO, 17% for XPeng. BYD was 20% up. The loser, if you would say, amongst the Chinese companies is Yatsen Global, rallying only 20% after a dismal, 95% drop. From $15 high, it's now trading at 64 cents, which rallied to 78 cents and 79 cents. 90% down of $15 is $1.50. So, yeah, it's 95% down. Yatsen Global is 95% down. And consider it actually one of the weirdest drops that I've seen in China, considering it still is operating. It's still selling makeup. For those who are looking at some makeup brands in China, yes, you can even see it in Shopee. It's a Chinese makeup brand, Perfect Diary, Abby's. They've got a lot of brands, but basically their bestseller is Perfect Diary. So yeah, it's not actually a company that's failing, which is it's actually still profitable as a retail makeup player. So you might actually want to check it out. PGJ, which is Golden Dragon China ETF, has gone down from $73 to $22. Okay, so that's just the entire Chinese index. Okay, let's talk about social media stocks, shall we? Social media stocks, what's impressive to me is, well, people might say they love Google, but because Google has become a well-loved name, there's no value. Well, value is more about quality, I'd say. For other people, if you're getting high quality names at the 20% discount, that's value. And if you're getting low quality names at the 50 or 80% off, it's just meant to be. So whatsoever your analysis is, the biggest discount today amongst the mega cap space is still Facebook, if you'll ask me. So we gave a buy rating on Facebook after seeing that, the market's been bottoming out. And Facebook is actually one of the biggest bargains that you can get. And just, sometimes a no-brainer buy for the people who are really looking for a short-term and a long-term idea. Meta Platforms is still a $40 billion EBIT operating income. And your current market cap for Facebook is 565. So I think it's trading at 10 times PE, depending 10, 12 times PE. Depending on, well, some would argue 25 times earnings, but 10 to 12 times price versus operating cash flows. So it's an amazing deal, if you'll ask me. So Facebook here about 190 to 203. Even at 207 is still a great entry point, if you'll ask me. And about the social media names, even if it just rallied 8%, I think it's one of those names that you can make 20% or 40%. If this is really the bottom, and if the market just wakes up and finds out that Facebook Reels is good enough to challenge TikTok, then we'll see that. We'll see a good reversal on Facebook, aka Meta Platforms. Another value I'm looking at here is Pinterest. Pinterest is now just trading at 16 billion. And I'd see that Pinterest is actually trading near its IPO price of 2019. It rallied 9% so far, 22 to 24 to 25. This one, if they happen to grow exponentially international, which is what they're focused upon, and there's their efforts on really doing a lot of e-commerce, could be one of the cheapest monster stocks, treated by the market as a social media name, but likely actually a hidden gem in the e-commerce side. So a $16 billion company on Pinterest here, I say this is still a contrarian, one of the best deals that you can find here. Pinterest, Facebook, one of the best deals. Now, of course, Twitter has always been a matter of execution. Spotify has been embroiled in a lot of controversies on the Joe Rogan. As for Snapchat, you can clearly see that Snapchat is trading quite expensive versus the rest. But it's still not as expensive versus the 52-week highs, which you could argue that Snapchat might just be properly valued. So far, what we're seeing on Snapchat is that it's trading within a range. The lows of about $30 and then the highs perhaps of $40 until another great earnings. So, of course, we saw already Snapchat bounce 60% from its $20 low of the year. So prior to the earnings, when Snapchat was just getting killed on and on. So Snapchat is already in a place of, I'm in a good earning spot, I'm just trading in a range, and F you for all the rest, kind of. So very good earnings on Snapchat. Pinterest has a lot to prove. Facebook has a lot to prove. And Google has been just really doing well. Now, for the digital advertising space, we are seeing, you have to admit that Netflix getting punished here, half, is also another great opportunity in my view. So amongst the big caps, I'm really interested with Facebook and Netflix. And of course, yeah, for the Chinese companies like Alibaba, I mean, yeah, I am. I'm very interested with them. Netflix here at about 343, rallied to 357, closed 371. I think a lot of bulls long-term on Netflix are buying long-term call options on Netflix, long-term call options on Facebook. We're talking about maybe 1-year calls until December 2022, or they're probably selling put options because they're getting a lot of premiums. So there is a point when, if you are really confident, is it fine to do a risk reversal trade? Example, I would sell a put, I'll buy a call option on a Facebook and in a Netflix, for instance, which are trading at 50% lows, right, from their highs. I think it's a matter of money. That's about it. Because if you sell a put on Facebook, one contract is 100 shares. That's about a commitment of $20,000. 100 times 200 is $20,000. For others, $20,000 is nothing. For others, $20,000 is a lot. So it depends on your account. But I think doing a risk reversal trade on Facebook makes sense because I'm a biased bull. Bull for all the reasons that probably any bull on Facebook also knows. Because irregardless of whether Metaverse earns or not, the market price today is already enough for all the interest rate hikes, for all the slower user growth on the Facebook. And, you have a lot of upside if they do well on the NFTs that they are trying to sell on Instagram. And generally, even if there is a recession, people are still going to advertise in Facebook because we've seen that happen during the pandemic. Pandemic was also a time when the world was not really strong sales to begin with. So I'd say that the world is wrong on Facebook and the world is wrong on Netflix. And that wrongness is your opportunity, a no-brainer buy. Netflix, the same thing. 100 shares at current levels of 370 is about $37,000. If you have $60,000, 20K on Facebook, 30K on 35K on Netflix, it's enough. I think you can do well on your account Just do a risk reversal contract on FB and Netflix. You'll be fine. In case you're wondering what would be a great strike for Facebook and Netflix, we're working on this assumption that March 15 is the low. So if you're going to sell a put, then a little below 192 is fine. So sell puts Facebook 190 and buy calls at 207, that would be fine. Buy at the money call and sell put at the lows of this. Buy an at the money call option on Netflix at 370 and sell puts at 343 or 340. If you ask me, the premiums would be enough. And it's just really a matter of your conviction that Netflix and Facebook, no matter what happens next week, next month, that you will not cut. Instead, you will really just go long-term conviction on your Facebook and Netflix shares. If you believe that they can do well, and I do believe that these large caps are really going to do well over time, these risk reversal plays could potentially give you a huge reward. So something to keep in mind. Okay, as I said, amongst the digital advertising, I have to mention that the safe names didn't rally. Disney, Comcast, AT&T didn't rally much, 4%, 2%, 1%, which is valid. If you ask me why they didn't rally much, it's because they're relatively large and they're relatively just safe. AT&T just pays what, 7% dividends. Comcast, I don't know the dividend that it gives, but in general, it makes sense that when there's risk on in the sentiment, they will buy up the ones that were high growth names that was just really sold down. Amongst this, I'd have to say that my favorites are the Trade Desk and Roku. So I bought the Trade Desk. I bought a little bit high at about 61. I think I bought as well before 60, 59. So I got in on the Trade Desk and I also got in on Roku. So favorites, those are my favorites. And I think that Roku will also be a great name. It was punished just like Zoom Video and Teladoc, all of these, Kathy, with great names on Roku. Roku fell from $500 to $100 without the fact that those revenues actually over the span of 3 years tripled. So I think more than tripled even. So Roku's sales was 2.7 billion and the current market cap is currently 16 billion. It's actually, it's to me, Roku and Zoom are great values. So these deals are amazing. It's amazing. That's why I wouldn't pass this up. If I were you, I won't pass this up. Netflix trading at 160 billion. If you are bearish, then you'll just think that it probably will rally to as most 20% from here. And after an 8% pop, 340 can only rally to 400. Even so, let's assume that it might just rally to $400 if you can buy it low, let's say near 340 or 350, still a great deal. Which is why I think Bill Ackman is making a huge position on Netflix. And if you ask me, those activist shareholders have already done the math. I don't need to do computation to these companies when I know that the institutions are already seeing the value on Netflix here. So I don't see that you can get it at $300 or $250 on Netflix. Fat chance. You just get 343, 350, 370 if that's something you like. Okay, let's talk about some of the most esoteric companies in the world, which is the genomics and healthcare space. I don't think anyone really understands, but they can see where the money is. Since March 15, March 16, most companies in the biotech has been very bullish. LabVIEW, 28%. Of course, this is a 3x fund, 3x bull. You can see all the market caps of all the genomics are less than 1 billion, save for the fact that Teladoc's trading at 10 billion, save for the fact that GoodRx trades at 6 billion, Exact Sciences trades at 11 billion, Intellia Therapeutics trades at 5 billion, but most of the rest are just trading peanuts, 200 million, 500 million, 600 million, because these DNA sequencing platforms and genetic editing is an unproven or such a difficult science. It's like a science experiment, which is why investors don't see much about the profits. When they have excess money or excess liquidity, they go into these. These are simple indicators in my view. You don't make any earnings on Bitcoin except speculation. Neither do I think genomics can make money except people speculating about it. Nonetheless, these speculative instruments are showing you can make about 10%, 20%, 30%, and watch for these lows because chances are these are already the bottoms. Amazing. Let's just read through it. Invite. Invite is the company that owns quite a lot of data from all the clinical patients that have to do genomic sequencing. $6 from 43, by the way. So it's what, 85, 90% down almost. Bingo, $10 to $1.75. PacBio, 37 to 9. Intelia, 202 to 58. Semaphore, 18 to 2. Iova, 35 to 12. Teladoc, 200 to 54. Amwell, 22 to 3. Editas, 73 to 14. Schrodinger, 83 to 28. GoodRx, 48 to 15. Hims and Hers Health, 17 to 4. Arc Genomics from 94 to 39. Beam Therapeutics, 138 to 55. CRISPR, 169 to 60. Exact Sciences, 140 to 57. Nautilus Biotech from 15 to 367. Humacyte, 17.45 to $5.67. Obviously, Biotech has tons of resistances. We will not see a bull market on these anytime soon. However, we would trade the ranges knowing March 15 lows are probably bottoms for them. So you trade the range, I think, for this cadre of stocks. This one is a favorite. I think everyone's favorite is the clean energy or the Captain Planet, what I want to call them. Captain Planet stocks, the stocks that you feel good for investing upon. Some of them make money, some of them have not made money yet, but might actually benefit from trillions of dollars committed by all the countries and the political candidates and the actual presidents of the world who wants to have a self-sustainable energy for their countries and not be having problems the same way that oil today is. So what have we seen? The solars, the TAN, the QCLN, the ICLN have been getting a lot of money flow, higher lows to be honest for some of them, and they bottomed out earlier before March 15. For the technicians out there, you know what I'm talking about. When a stock bottoms out before the market, that is a leader. We know the leader sectors, and that is the clean energy sector. This is the leading sector. This is where you want to be in the most if you want a big move. So, okay, well, this may seem just 0% for Solar Edge. This is actually a 50% move already for Solar Edge. It rallied from 200 to 300. It is very much just 30% from its 52-week high of $390. Any dips of Solar Edge will be bought, in my view, by the market. If the market is truly transitioning towards solar, then you will see Solar Edge and Enphase continue to be bought on dips. And people did. Look at Enphase from a 52-week high of 282. It dropped to as low as 112 actually. From 112, it already rallied to 160 and maintains that high of 180. The fact that they're trading near their 52-week highs suggests to you the market didn't plan to sell them in the first place, no matter about the war, inflation, rate hike, and whatever you want to call them. The market actually saved the best stocks they wanted. It's like, you know, if there's a fire, you try to find your jewelry box or your children. They are the most important ones rather than the entire house, right? So you just leave and try to leave. I'd say that with the world imploding to chaos, this was the sector that the market tried to hold on to the most, aside from their favorite FANGs and semicons. Yeah. So amongst them, we were also seeing solars really rally. So okay, let's just go through these. So Jinko Solar from 66 dropped to 41, at least on March 15, rallied to 50, near the 52-week highs yet again. Lithium Cycle, Li Cycle or LIC 14, one of the SPACs that avoided getting clobbered. because of the fact that batteries were actually needed. So 8 to 9. Charge point, 36 to 15, now 18. You're noticing that Lycee and charge point are SPACs. And usually, what did you see with most SPACs? They fell 70%, 80%, 90% from their peak. The fact that Lycee and ChargePoint are trading quite in the nine, the fact that they're actually just trading 50% or less from their highs tells me there's a buyer on ChargePoint. There's really a buyer. So it's being traded right now. But there's a ton of buyers, something to keep in mind. Array Technologies fell a lot, 37 to 10, rallied to 12, the dead cat bounce, if you'll ask me. CleanSpark, 25 to 9 to 11, this is a dead cat bounce. QuantumScape, well, it rallied from $130 to as low as 10. From 14, it rallied to 16. I do think that some of these names will be a dead cat bounce. So QuantumScape at $20, have some sellers. Freyr Battery, same thing, 14 to 9 to 10. There will be some dead cat bounce plays here. Ballard Power, 27 to 10, rallied to 12. Some of these names don't earn money, so I don't really expect them to go all-time highs, but it's a well-loved sector. Plug Power, 46 to 23, rise to 26. Again, it's going to take you 7 years just for these companies to make money, but the world just wants to invest in them. We will trade them, however. Denison Mines, $2 to $1.48, rise to 164. Bloom Energy, 37 to 21, rallies to 23. 51's CSIQ drops to 30, rallies to 34. Sunrun, if I would say a chosen one, I'd go for Sunrun and Face Qualcomm. Sunrun, yes, I like this. Very strong. In fact, Sunrun bottomed at $18. It rallied to as high as 28. The fact that it's already up 50%, actually, and rallies further at 31 tells me outperformance on Sunrun. Same for SunPower. The bottom was actually 14, 13 areas, rallied already to 20. Sunrun, SunPower, Enphase Qualcomm, Enphase Solar Edge, those are the 4 names within this list that is my favorite. Nonetheless, you can trade everything else in the market's clean energy wave whenever the market wants to. So we still pay attention to all the rest. Fuel cells like FCell rallied up. Uranium rallied. URG. American Battery Metal also rallied. I think it's trading at $1 today. Yeah, so yun. Okay, so let's talk about 3D printing. With 3D printing, I don't know if there's some $3 support, but most of them bounce from $3. Markforged from 3 to 380 through $4, sorry, 3 to 4 for Markforged. Desktop Metal from 389 to 379 to 499. Nano Dimension 324 to 364. Triple D Systems 13 to 15. So a big jump for Markforged and Desktop Metal so far. I'm not sure if this is sustainable, but at the very least, when we are seeing broad-based movement on sectors that is not expected to make money yet, then that tells me risk appetite is definitely back. Now, how about e-commerce? Not all of these stocks are making money, but Grab managed to go 25%. Coupang rallies 24%. Market caps of 14 billion and 33.7 billion. Obviously, Grab lost a lot of money, just like Uber and Didi Chuxing did early days of their lives. So I think like what the markets are doing for Grab is buying it while it's $3. So $3 rally to 378. Perhaps there will be some sellers at $4 to $5, but it's trading in a range. So we're seeing a trading range already for your Grab. C Limited, actually the bottom was 85, 93 to 114 today. Still just 20% top. I still see C Limited as the most loved company in Southeast Asia. Gaming, e-commerce, money, fintech, people love this stock. And that love will translate back to about $200 in my view. So we do have high conviction move buys on C Limited. So I got in as well on C Limited. And any dips below 100, I'd still buy more. So market cap right now is 60 billion. Sure, it can go 20% down from here, just from profit taking. But I'd say people would buy any dips, no? Mercado Libre, I find it a bit expensive, although it's possible that I might just not live in Latin America. Either way, it's trading at 57 billion. So Latin America sa Amazon and Mercado Pago. So similar business. In fact, C Limited and Mercado Libre are heads to heads fighting in Brazil. Although I think C Limited just announced that they are trying to leave some of the markets to focus on profitability a little bit. No, sorry. C Limited is not focused on short-term profitability. That's why they've been expanding to as far as Brazil, a lot of Latin American countries, even heading and fighting Mercado Libre. So C Limited is already the number one. For those who are aware of Shopee, of course, you should be aware if you're Southeast Asian. Indonesia, a lot of Filipinos, Philippines, Malaysia, all Southeast Asians, the number one shopping app is already Shopee. So it's quite profitable. We've seen triple-digit growth on their app users and gross merchandise value. It's a company that is bleeding money, but it's worthy to bleed if you're gonna be a $1 trillion company someday. So some people are looking at C Limited as a potential 1 billion. 100. It's a company that's worth 100 billion or more. So it's trading 40% below 100B. So come to think of it, if you just want to make 40%, then go ahead for C Limited. But if you're in for the entire story, perhaps it's one of the companies you want to trade and long-term buy. So I'm sounding very biased, but yes, I'm biased on C Limited to the bull side. Shopify is an $82 billion company today. From 1762, it traded as low as $500. It's now trading at $650. It's actually 30% up from its lows. But what you're just seeing here is a rebound from the closing prices. Either way, our favorites usually on the e-commerce side is C Limited and Shopify, although some of us would buy Etsy. So yeah, I'm more for the C Limited and Shopify, but others would also choose Etsy or Coupang or Grab. Actually, I guess I'm biased for all. To be honest, this sector is something that I'm quite biased to go long upon. Well, for Amazon and Google, I just think that you'll just make about 20% for these. So I don't really care much. So Amazon is up 6.7%. There's a huge buyback program. There's a 20:1 stock split. Some people are still buying Amazon. It dipped to 2.7. It's now rallying to 3.1. I'm not sure if there's a reason for Amazon to trade at 3.5 or 3.7 in terms of consumer spending, possibly halting or slowing down. So I'm mixed bag on an Amazon. I'm not sure. I guess neutral for me. As for crypto items have been rallying, always correlated with Bitcoin. So yeah, Ethereum and Bitcoin rallied about 5%, 9% for the past few days. And MicroStrategy rallied 10%, Silvergate, WAGMI, all of the Bitcoin miners were up. Amongst the Bitcoin miners that went up quite a lot was Argo Blockchain. I forgot to put in Riot and Mara, sorry. But in general, I'd say that there's a reason why I didn't put them. Sorry, I forgot them. But either way, usually for miners, I just choose Bitfarms and Hot Mining. So I go for the Canadian ones. I think the Canadian miners are more friendly in terms of ESG policies, in terms of their mining of Bitcoin. So in case you want an ESG-friendly miner that is quite efficient and not as expensive, and with lots of Bitcoin reserves, you go for Hut and Bitfarms. So far, the market is correct in pricing that correctly as an outperformer. 15% up for the 3 days, despite the fact that Bitcoin was just up 5%. So what you're seeing here is that the market is treating Bitcoin miners as a triple leverage Bitcoin fund. So example, if you want to go long Bitcoin at 40,000 and you think Bitcoin is going to go 50,000, that 25% move could become a 75% move if you just simply buy a Hot Mining or a Bitfarms or Argo blockchain instead of Bitcoin itself. Because some of these Bitcoin miners are trading still at lower market caps versus Bitcoin itself. So that's about it. So just a point to understand. Now, for all the sad things that happened to Cathie Wood's fund, we do think that this last 3 days of about 52 to 62 is already a sign. That was a 20% move on Cathie Wood's growth stocks, a sign that we may be seeing a bottoming out, bottom fishing on growth stocks already in the market. Now it's possible that at 63, it might get sold down at $60. It might get sold down even at 56. But I think this is the time when you will have to assume that that $52 is a dip to buy. So as low as possible, if you can buy ARC at about 52 to 56 next week, next week, I think that the answer is to buy. So from March 15 until say April 15, you should be on the lookout to buy the dips on a lot of ARC names. Let's take a look at this chart of LabVIEW. So Biotech, we said that the Biotech bull looks to have been bottoming out. So at the same time, I think this one is already bottoming out here at 12 to 13. So any dips of LabVIEW, LABU, I will be a buyer at 12 to 13 if I can get in. Roku, I'm also a big buyer here. It's trading already from 100 to 120, so 20% up for the last 3 days. In my experience, it could rally for another 3 days before getting a lot of profit taking. Sometimes people will already profit take today, 4th day. Sometimes it could rally all the way, like 10 days without nonstop profit taking. Roku can just go 130, 140 and all the way. Nonetheless, for the people who don't have it yet, try to buy 10% from its lows. Don't try to assume that you can get it at $100. So some people will try to buy 110, 113 for Roku, and I think that's valid and that's fine. 5% to 10% slippage from last night's close is good enough. So this is the US connected TV, connected advertising revenues by company. You're seeing that this is YouTube, this is Hulu, and this Roku. So those are your biggest. I don't know if this is correct. Anyway, that's what eMarketer said. So apparently, Hulu has a high ad revenue per share, per user, perhaps. Either way, let's just read through the Roku shareholders letter recently. Well, for fellow shareholders of Roku, 2021 was another strong year. We achieved record revenues, gross profit, adjusted EBITDA, and ARPU, average revenue per user. Roku's founding vision remains true. All TV and all TV advertising will be streamed. I agree. I just watch all my advertising on YouTube. I watch all my advertising. Well, eventually it's gonna be on Roku and Netflix, right? For Americans, they use Roku. I do have, but not everyone in the Philippines are. So almost every major media company is reorienting its business around streaming and has launched a flagship service. This is why I'm very bullish on The Trade Desk and Magnite. Yes, spending billions on content and marketing to attract and retain subscribers. At the same time, with the significant gap that exists between viewership and ad budgets, we're still in the very early days of the secular shift to streaming. To be honest, if you're very bullish on YouTube, I would be quite surprised why you're not bullish on Roku. Quite the same secular trend we're talking about. Quite the same secular trend on The Trade Desk as well. Being bullish on streaming is being bullish on Roku, especially at these levels. Our competitive advantages, the Roku operating system, the Roku channel, our ad platform, positions us strongly to continue leading this shift in the years ahead. So for the last few quarters, we can see that the active accounts has continued to grow, albeit not as super strong, but 50 million to 60 million. That's 10 million new accounts year on year. Streaming hours continue to grow, 17 billion hours to 19.5 billion hours. For others, this 15%, 17%, they might poo-poo on this growth because they might be, for some people, they want 100% growth year on year or something. But this is good enough. A growth stock. Gross profits was up to 1.4 billion. Platform revenue increased 80% to 2.28 billion. Total net revenue is 2.76 billion. So what you're seeing is that 90% or a majority of their net revenues comes from platform, the Roku platform, not the sale of devices. That's why a lot of people call Roku as a razor and blade model. You make 500 million on selling the remotes and the devices on TVs, the connected TVs, but you make more money on the advertising within it, the software behind it, the operating systems behind it. So gross profit, streaming hours increased by 14.4 billion hours to 73.2 billion hours. Average revenue per user up 43% to $41. It's the number one TV streaming platform In US, Canada, and Mexico by hour streamed. I'd say to anyone with Roku at higher levels, number one, you've suffered enough. You should buy more. For those who don't have and have cash, this is a great opportunity. We save cash for opportunities like these. And if you don't see the opportunity in front of you, you might miss out on the next 20% run, which just happened 3 days ago. 3 days ago, it was $100. Now it's $120. Don't wait for the fact that it's already at $150 and you're going to still ask, can I still buy Roku at $150? Square. I love Square. I'm biased. It's a long trek back. But over the last 3 years, to be honest, since existing, since its inception, Square has done nothing but grow and grow. What a wonderful business. They grew their merchants, they grew their payments, and with all that money that they had, they acquired a company called Afterpay in Australia. And yet you can still buy it at these levels of $85, similar to the price of 2 years ago, when in fact, all they did was just grow. I'll be biased. From a fundamental aspect, C Limited and Square and Shopify always are at the top of my list. Yes, Palantir too. But, I think as a Southeast Asian, I really am appreciative of cashless. So I love the fact that GCash is in the Philippines. And I guess if I'm in the US, I do love, I would be a big believer of Square. So, and I am. So Square, it's a long trek back in my view to 200, but I do think it can do it. So the bottom was in 83, good earnings, kaboom. I was there. The recent dips at about 94. I think I bought only at $100, but still, yeah. So this is really a fundamental bet. Fundamental and technicals all colliding to tell you that the dips on Square are in. So yes, dips by Square, SQ, aka block, because of course they're a believer of the blockchain. I also want to say that today is also the quadruple witching day. So one thing that I have to share to you is that all the key bottoms of the market this year happened near the quadruple witching day. January 28, February 24, March 15. Short-term bottoms. Did you notice something? They all occurred near options expiry. Jan 28 was near options expiry. Fab 24, near options expiry, end of the month. March 15, also near options expiry, which is March 18 today. We usually rally and we usually bottom before the options expiry, meaning everyone who had put options in the market was closing all the puts. They were closing and buying back all the shares, and they have something to deliver on whatever their put options were. So those three datas, in my view, make a trend. And it's something to keep in mind on the next options expiry date on April, on May, on June, July, August, September, October, November, December. Basically, every options expiry date, you actually have people buying up shares prior or ahead of the options expiry. Because everyone is still skewed on the put options. That's why you have these large short-term covering. Short covering, that got bounce, relief rally, whatever you want to call it, but it's going up. The point is, it's going up. So I know you might say, buy the dip, the dip, the dip, and then 1 day of or 3 days of rebounds, you're rejoicing. Well, to be fair, I didn't tell people to buy the dip, the dip, the dip, the dip, the dip, the dip, the dip. Instead, we kept on saying to be cautious, to have cash, to sell the rips. However, this is quite a different type of rally in my view. After selling the rips on January, selling the rips on February, even on March, early week, even last week, we were selling the rips, selling the rips, selling the rips, selling the rips. And in fact, people are already asking, isn't this rip a sell the rip? I think that this might not be a sell the rip because so far, the strength in the sectors are quite strong. That said, not all stocks are great. If you really want to short some companies, I'd argue some clean energy names which will never see the light of day of profitability can always be shorted. Just wait it out. You'll have your chance. You can short some clean energy names. We can choose the companies that we will short. That is my view if you are really a bear. However, for the likes of Netflix, for the likes of Facebook, give them a break. I think some of them have really bottomed out. Is it possible that Palantir has already bottomed out? Well, it's two things. Well, it could just trade 9 to 14. I am not quite sure if it's going to go moon because, of course, people would say, why speculate yet again? But in my view, the great growth stock sale could have bottomed here. So at the very least, if that is the bottom, 9, 9.5, 10, any dips of Palantir there are buys. This is also something to take in mind for the Alibaba buyers or the ones who are planning to get in on Chinese stocks. I saw this on Twitter. I know it's a little bit late. Let's just read a few things. On March 3, 2017, shares of Alibaba closed 103. I think the market is mispricing the concerns of Alibaba. No matter what, the market finds something not to like about Baba. From their VIE structure to the friction with the CCP. I have not seen anything about the VIE in some time, and these concerns were not anything new. The VIE structure concerns were around even when the stock exceeded $300. Nothing changed except public perception of Baba's stock, which has just created a larger opportunity. On October 27, 2020, shares of Alibaba closed at $317. Since then, the shares declined by $215 or nearing 70%. If you'd entered 1 year ago, then you're just down 50%. Haha. It's getting harder to watch shares of Alibaba continue their downward spiral. It seems nothing will stop this free-falling momentum. I have not thrown in the towel. I've averaged down more times than I would have liked to on Alibaba. If you've invested in Alibaba with the idea of making a quick profit, then it's extremely painful. While I never like to see stocks I own decline, the numbers are always the deciding factor for me. Since 2017, numbers have gotten only better, yet I can buy shares for just less than what I could buy 5 years ago, or that was actually you can buy Alibaba right now at the same price of IPO, which was about 8 years ago. So more than generating 17% of revenue generates today. I conduct a lot of research into companies. I don't make any decisions based on what others are doing. And the reason why I look at Charlie Munger doubling down on Alibaba as significant is that he trusts the numbers. Only time will tell if the bulls or the bears are ultimately correct. Shares would continue to decline, especially with this geopolitical uncertainty in the world, unless Alibaba comes out and declares massive fraud with their accounting practices, Enron style. Shares look incredibly cheap, and I plan on dollar cost averaging yet again. Investing is not a sprint, and I'm in this for a marathon. E-commerce and cloud infrastructure are still experiencing large amounts of growth, and Baba is positioned to benefit from these growing markets. If you wonder why VNet and KC rose 70% or 100% in just 3 days, I think it's because China and cloud. Spell that to me, and that's VNet and KC, China and cloud. And right now, I read this from somebody who's a fundamentalist. I'm not really a pure fundamentalist, but I could not get my head avoid the fact that the biggest opportunities, even if you will take the risk, will come from the companies that you are also seeing immense opportunity and rewards, no matter if the risk is maybe my money will just sleep. So yeah, I bought Alibaba on the current drops, $75, and Alibaba was $75 in Hong Kong. And then I also bought in the US at about 98, 99. Yeah, I bought that. Tencent, I also bought 370. So 315, and then I added more at 370, 380. I think that this mispricing in China is an opportunity, whether you agree or not. Well, I've been burned in my Chinese exposure in the past. That is true. I've bought, I had to cut, but I'm willing to buy back again. That's about it. I remember selling my Alibaba at 170 and my cost was 208 or something. Yeah. So point is, at these levels, sure, go ahead. Repeating some fundamentals on Alibaba. Core business is comprised of retail, wholesale, that's China, retail commerce, yeah, cross-border and global, wholesale commerce, logistics, consumer. And the sentiment change card today is, of course, China's government is now supporting Chinese stocks. So the current price of Alibaba at 96 is still a buy. You've got the technicals with you. The sentiment is now with you. The fundamentals are all implying a potential bounce. The key is to buy. The conclusion is to buy. Of course, there's a lot of risks. Volatility on geopolitics, the CCP, all the animosity of the world, all the hate, the VIE structure, which is the delisting fears, which the world is now saying it's not going to happen. The COVID lockdowns, which is, of course, Chimton also got just locked down. So there's going to be a lot of problems there. Inflation, wars, I argue that it is all priced in. That's my argument. The pricing on China, all of these risks, all of that is priced in. China is, in my view, still the world's largest economy, the barometer of China internet, proxy to Chinese online consumption, still the undervalued prospects for international expansion like Lazada. Lazada is growing in Southeast Asia. Earnings growth implying massive rebound potential for Alibaba. If you think about it, you're really just getting everything for free when you're buying Alibaba. But of course, there's just so many risks. And people are saying, this is Charlie Munger. Shut up, we only buy America. But Warren, Baba is on 10 times PE or even less. I think it's just a matter of, if you are really saying that China is uninvestable, I won't disagree with you, because I think that China is the market with very opposing views. You've got North Pole and South Pole. It's uninvestable. It's massively undervalued. You just got chaos. Okay. That's why the end story is that China's gonna be a trading range. I would say that at $120 Alibaba, people will just dump yet again. And Tencent at 420, people will dump yet again. But every time it falls, tell me, I think it's not going to go below 75 for Alibaba. It's not going to go below $300 for Tencent again. So I think that there's just a huge trading range, which you can make 30, 40, 50% possible. So, just showing some nice charts, nice graphs. You can see all of these from the people who love Alibaba, the Alibaba Cloud, the Ant Group, Tainiao, all of their consumer services, all of their cross-border retail commerce, even their digital media. And of course, Alibaba owns a ton. And Alibaba and Tencent owns a lot of internet companies in entire China. So they are the VCs of the entire unicorn startup in China. If everyone was saying, you just buy Palantir because you got all the SPACs that are really innovative, did you ever ask yourself that Alibaba and Tencent are the same? Alibaba, Tencent, Palantir, why do I like them? There's a lot of similarities, actually. Perhaps the only difference is that it's geographical. Sometimes it's just geography. Annual gross merchandise volume transacted on Alibaba's retail marketplaces. You can see it's just a good move, and you can buy the same price at 2014 levels. Alibaba IPO'd $93 in 2014. It is $92 in 2022. Either you see a huge mistake there in the market, or you believe that the market is right. I think the market's wrong here, so great to look at it. This one, I will just give you a fast look. I know it's a very long time, it's nearing 7 p.m. But Mark Mobius just shared in a video. He said that anyone who wants to protect themselves against inflation should look at the stock markets. Because again, if you're looking at gold as your inflationary hedge, I would also say that a good inflation hedge for you is the equity stock markets that are really high quality. I mean, you can just choose Netflix if that's something you wish. Just choose Meta Platforms. Just choose a great company and you should be fine. C Limited is good for me. Just looking at small caps as well. So wearables also like Copen rallied up. Whether that's sustainable, let's see. Huya, that's a Chinese name. So we'll see if it rallies or just trades as a range. Desktop Metal, massive breakout there at $4.27. Is this real? Is it going to go 6 or is it going to go back? Semaphore just rallied from 267 to 310. I'm just looking at many SPACs as well because nobody pays attention to them. It's an indicator to me that the market is bottoming out when a majority of stocks are showing the same resilience and strength. And that's it, guys. Okay, there's a question. NVIDIA. I find NVIDIA, Google, Amazon, you'll make about 8 to 10%. Not a huge return because it's not beaten down, but you'll make money. Because I did see all the semiconductors showing strength. So NVIDIA, Tesla, right? So it's showing strength. But they're not the super discounted names. If you really want discounts, I mean, from the large caps, I'd go for Alibaba, Facebook, and Netflix. On the mid caps, you can really choose Square, C Limited, Shopify, Palantir. Let me just write it down. Okay, let me write it down. But these are just really top of mind. For large caps, I will choose FB, Netflix. What did I say? Baba. Mid caps, go for some Chinese names that are really Chinese names like Pintuotuo, Square, Shop, SE, Palantir. Small caps, I'll go for, grab a 3 probably. I'm not quite sure about this. Actually, I'm not quite sure about that. For small caps, I think they're bottoming out. I'm just not quite sure if the market is really going to buy it all the way. I think mid caps will give you a lot of value. Twilio, Pinterest. There's really a ton of value. I think like you can just buy quite anything that you really love. But and if I didn't mention it here, it doesn't mean that I don't like it. Like Teladoc has value, Zoom has value, the Trade Desk, Cloudflare. I don't have a prediction on what is the highest bounce. From a trading perspective, I think Yin, LabVIEW, great buys, of course, Soxcell if you play the semiconductors. If you want the Chinese businesses, as you can see, the market likes Dada. I agree with that. Agora, I agree with that. I agree with the market buying the KC and VNet on dips. So you have to just simply know. I mean, look, even though you and Yatsen will get some buyers, all right. I mean, I think the entire Chinese stocks are just really clobbered to the ground that you can just see it go up. I mean, Futu, yeah, of course, you can get that. So there's just a ton of great value there. And I don't want you to just copy things. I mean, ask yourself what companies you really want, because we're really, I think, in the midst of a huge bottoming out process. And the fundamentalists are now backing things they really, really love. Okay, so that's it. Have a good Friday. See you on Discord Voice if you're in the Awesome10X team, and see you again next week. Bye.